Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and this is the FX Rundown. The dollar gained some ground today, ultimately not because the data here in the U.S. was good, but because conditions abroad were deteriorating. Now, China data last night showed industrial production, fixed asset investment, and retail sales all below estimates. German GDP this morning was underwhelming, and then on top of that, Italy's budget crisis is back in the news. But for the U.S. data, retail sales contracted. You also had industrial production contract. Both misses against expectations. New York Empire State manufacturing was a bright spot though, and we have Philly Fed manufacturing tomorrow that's going to be crucial. Those manufacturing numbers are May reads. They're very fresh data points. And then another May read on Friday is the Michigan consumer data, so keep an eye out for that. But ultimately the 97 level, the dollar index held ground, and yesterday it helped bring the tape up here through to this session. Now, as on the flip side, you have the euro. We keep talking about that major three-star resistance level. It is stalling price action there. Now, first key support, 112.07.5. It held today in the euro, and it consolidated back on both sides. The euro and the dollar, we saw a consolidation through the day. Now, tonight, you want to look forward to Aussie employment data that's going to move the tape. The Australian dollar is in a breakdown right now as the U.S. and China trade fears. You know, they haven't escalated from where they were Monday or Tuesday, but for the Aussie dollar, it's in a full technical breakdown now. And we've talked about this beginning end of last week and coming here into Monday and Tuesday. Look for this Aussie dollar to stay below 70, 69.70 to 70, and it's going to be in breakdown territory there. Path of least resistance to those early January lows. And we have that on the FX Rundown report, which was released on Monday. Those technical levels are all still valid. Now for the yen, you have a little bit of a consolidation higher in those risk assets. Early in the morning, the tape was ugly, but you had President Trump said he's going to delay auto tariffs. This helped bring a little bit of a tailwind to overall Europe, as well as the euro, to risk on assets. You saw the equity markets rally. The yen, though, held very well against the highs of the session relative to the strength we saw in those risk assets. So the yen, there is major three-star resistance up there, 91.85 to just above 92. It's going to be a tough one to crack above there. Don't chase price action up here. Look for pullbacks. There could be some buying opportunities, but ultimately what you're seeing here is the equity markets getting above some resistance. They still have some overhead resistance, and if the overall landscape remains choppy, that's supportive for the yen. However, if the dollar index, you see the dollar index increase on better data tomorrow, and the equity markets capitalize on that, look for the yen to take a sharp turn down in the very near term. And then lastly, with the Canadian dollar, it's actually held ground very well today. CPI was underwhelming. They actually had some better than expected housing data. Crude oil had a good session. Canadian held ground. More importantly, you have the U.S. MCA deal getting closer and closer, and there's may not be tariffs that are going to be implemented on steel and aluminum. So that's allowed some relief here in the Canadian dollar overall. It's battling at our pivot level 70, right near 74.5. Some good strong overhead resistance. There's some good strong down below support. But right now it's consolidating on either direction here. It's going to be tough to say. You have some data coming out tomorrow in Canada, and any further developments with the USMCA that would lead the Canadian dollar higher if there is positive news there, and if crude oil continues up as well. Give us a call. We're here to help with anything on the board, 312-278-0500. You can email us info@bluelinefutures.com. Check our website for updates. You can sign up for a free trial of research there. But remember, futures trading involves substantial risk of loss and is not suitable for all investors. Thanks a lot.